home and relays the data. And before you know it, you get a drone attack and they know exactly where the targets are. Okay, this is Persian technology, and this is not primitive.
No, very sophisticated.
What you've got is maybe a bunch of uneducated Houthis who are being trained quickly to use drones and knock out ships, again, in the asymmetric warfare. And I think they've earned the respect of the British shipping morons who insist on sending a ship through. And from what I understand, about 5 have been sunk.
So you foresee a potential scenario where we could have an obstruction in the Red Sea that would be so significant that it would have the domino effect of collapsing, causing some sort of a collapse. Did I hear that correctly when you were saying that?
Yeah, but not an obstruction where the ships can't get through. The Red Sea is rather big.
Right.
The Suez Canal is obviously a bottleneck. They're not permitted to get anywhere near the Suez Canal. And I find it
So not a physical obstruction.
Not a physical. It's like, we can't get through the Red Sea, so let's not bother. We can't get 50 miles from the Suez Canal, so let's not bother. There's another irony here. They wanted to, let's just say, make a clear path through Gaza for the Ben Gurion Canal. Mm-hmm. And as a result of that plan, they can't use the Suez Canal. But the Ben Gurion is not even there. The Ben Gurion Canal probably, if they began today, would not be completed at the year 2030. Mm-hmm. So they wanted plans for the Ben Gurion and lost the Suez. And they figured that they would do a lot of financial damage to Egypt. And they did. But Egypt is going to get probably some form of aid to get them through. Oh my gosh, this is really messy.
Yeah.
The Suez factor, remember it was 3 years ago that a ship from the same company that hit Baltimore got grounded in the Suez and it was loaded with kids. And none of them survived, or very few of them survived from dehydration. This is a wicked, wicked concept, and I'd rather not get into that. I believe the Suez factor will contribute toward a decline in Western shipping and therefore in some of the trade payments and work toward a much bigger momentum in non-dollar trade payment.
I see.
Okay, I got to tell you something that's a good summary. I've had a lot of comments in the last 5 years from frustrated clients and a little bit, how should I say it? Angry clients and frustrated colleagues. When on earth are we going to see 2000 gold and movement up, up, up? And I said, when it becomes rather clear or with very high suspicion or a lot of attention that we have a government debt default in the United States. Now, notice that we're above 2000 and no one's talking about a pullback to 2000 anymore. They're talking about a pullback maybe to 2250 or something like that. Mm-hmm. Okay, we are now in debt default debate territory. Debt default debate. And I'm going to tell you something that I truly believe, Patrick. I've said this before. When the Treasury repo window blew up in late 2019, I think that was the first volley, the first chapter of the U.S. government debt default.
Okay. And this, we've talked about that. I remember that.
This is not simple. We may see the debt default as a 5 to 7 year process because there's that much dollar and treasury ownership out there. Central banks own $7 trillion in treasuries. And the narcos own trillions in dollars. Okay, I tell you, this is
Well, let's dig into that a little bit, because I wanted to, you brought up a couple of things that I wouldn't mind actually picking your brain about, but let's get into gold and silver and what's going on with BRICS and de-dollarization, because this is actually, you must be reading my mind. This is the second topic that I wanted to get into tonight. You just kind of segued right into it. But, clearly we've got a trend going with the precious metals. Like you said, we've passed some very important indicators, some very important markers where gold and silver have tested, and they haven't tested in a really, really long time, gold especially. And I think it's revealing the truth about the U.S. debt crisis. In fact, I think it was the IMF just yesterday came out and made a couple of very interesting statements. They said Russia is now growing faster than all other advanced economies around the world. And they said, conversely, that the massive fiscal debt of the United States has stoked inflation and poses a threat to the worldwide economic structure, or something along those lines. I'm kind of paraphrasing, but there's a lot going on. I mean, people are noticing precious metals are surging. We're seeing the BRICS nations just continually expand and consolidate their influence and power. De-dollarization is accelerating. You talked about a potential Red Sea moment, like we've heard that phrase for a very long time. Could be stemming from some sort of an obstruction in the Red Sea. So, what have we not covered in terms of, where this is headed? And now that we've crossed over these very important thresholds with precious metals, I mean, what does that really indicate to the listeners out there in terms of where we are in this, like you said, could be like up to a 7-year process of debt default? I mean, what can we expect to see in the near future? I know I packed a lot in there, but I guess I figure, just kind of take it wherever
I think
you want to go with it.
We've got at least a 2-year gold rally.
2 years. Okay, that's good news.
Oh, at least. Okay, let me make a couple of very basic observations.
Okay.
I'll get to your 7-point question.
I apologize.
It's okay. It's okay. This is we're just.
I only hit the people that I know can handle these questions, and you're one of the few. So.
Okay. Remember, it was back in December we heard about Operation Sandman.
Indeed. Yes.
Okay. And Operation Sandman basically had the threat. I'm going to make this really simple according to how I perceived it. 2 days, 20 countries selling $2 trillion in treasuries.
Yeah, something like that.
2 days, 20 countries, $2 trillion. And because of the Japan case study, Japan is now in a downward spiral for a financial crisis because they sold almost $200 billion worth of treasuries in a 1-year period. And I think the BRICS observed that. And what they noticed was, oh, gee, we can't sell treasuries that fast.
Because it kills the currency. Yeah.
Because it kills the currency. But, some of these countries don't, like Iran, they don't have a dollar-based currency. It's the Forex. It's the major Forex. It's the IMF special drawing rights nations. It's the United States. It's Japan, England, European Union. And a mysterious one in there is the Swiss. Okay, I'm going to say something controversial. I don't think the Swiss have a dollar-based currency. I think they have a narcotics-based currency.
I don't doubt that.
Okay.
And narcotics and other things as well, I would add to that list.
Yeah, they have a cuckoo clock basis. Yeah. Cuckoo clock, cheese. They have a narcotics basis to the Swiss franc. Okay, I'm being silly. But because of the crisis that Japan got into, and quickly, they sold a lot of treasury bonds and they did not maintain the dollars in their dollar reserves that backed up their yen currency, and therefore the yen went down. This is a paradox, and very few people get this. Alistair MacLeod gets this, and a few others might, but they're not really plain about this. If a foreign country in a major Forex nation, IMF nation, sells treasuries and does not keep that huge amount of funds, the proceeds, if they do not keep it in the dollar, their own currency goes down.
Right. The
dollar goes up when they sell treasuries. The dollar goes up. I've been saying this now for 7 years. The dollar will go up, up, and up some more during its rejection and then vanish in a supernova. and that's getting requoted. And I love to hear the requote because it means that people are paying attention, but they're not getting one of the typical dynamics. The Japanese sold treasuries and their yen went down because they turned it into gold. All right. Now, here's my Operation Sandman revised forecast.
Okay.
20 countries, 2 trillion in 2 years. We got a long bull market in gold. We got out of the 2000 shackles.
Mm-hmm.
And now we're going to be looking at 2,500. There may be a pullback. I have a target. I said it was 2450, 2550 in a public article that Zero Hedge posted. By the way, my first article, Zero Hedge, and really happy about that.
Congratulations. I like Zero Hedge. Yeah.
And thanks to Gold Fix, which is an approved contributor. They ushered that article in. A very helpful guy. He just changed his title a little bit. I said, hey, fine, do whatever you wish. We said, we're not going to change the article. Okay. Because of Operation Sandman revised to 2 years, we're going to see nation after nation slowly bleeding the U.S. Treasury and forcing them to cover with redemption, the dumped treasuries and the maturing treasuries. And this is a colossal sum totaling somewhere between 10 and 12 trillion this calendar year.
Wow.
That's 8 trillion in long dated maturities, treasuries, 2 trillion in short dated maturities that they're coming to their end. They're maturing. And add to that all the dumped treasuries, like Norway saying we don't want them anymore. Korea saying we don't want them anymore. These are going to go down in value. We don't want to get holding the bag when these have a default. So they're smelling that default that I described as motivating the push over 2,000. Let me make a quick comment. When we start playing around with 2,500, you're going to wave bye-bye to 30 silver. We're going to go above it, cause short covering. And remember Fibonacci, it's such a small market. I think I'm going to get this right, Patrick, but I think a morning session in the stock market for Apple stock volume, just the morning volume in a single day is the same as silver for an entire year. Silver is a very small market. So once we get over 30, and I do not think the Swiss Basel crew are going to get in the way like they did in 2020. I don't want to get into that whole story, but they made available 200 million ounces and made sure we did not get above 30. That was in the GameStop and the Reddit networks. And Sprott wanted to do a Reddit network against silver, but he had his life threatened by, were they patriots or were they fascists? Okay, we're really getting tired of the fascists. Now, back to your question about the multi-sides. I think there's 3 very big factors that need to be mentioned. And I'm going to go in reverse order to what I wrote them down. The first is we cannot find buyers of our debt. We cannot find buyers of the maturing debt. We cannot find buyers of the dump debt. We cannot find buyers of our current deficit, which gets securitized into treasury bonds. So we're going to have to monetize them. I believe we're going to have a little bit of work in the background from the Exchange Stabilization Fund, but let's leave that as a wild card that could happen. Tapping the ESF. When you monetize debt, you introduce price inflation very quickly. It comes from the treasury bond market and works its way through the entire economy.
Now, when you say, let me just pause you really quick. When you say, just for the audience's sake, you use the term when they monetize the debt, what specifically do you mean by that? Are you talking about just increasing the supply of money, printing money, as they say, even though it may not be physical printing, but basically just dumping more into the system, right?
Print money, dump it into the system, but in an organized way to cover the treasuries that we cannot sell.
Okay. And this correlates, of course, with the failed bond auctions you're talking about. Right?
Well, that's because we can't find buyers. And because we can't find buyers, we need to avoid the death of the primary bond dealers that are bound by contract
Okay.
to buy whatever is unsold at an auction. And we're very likely in the next year or so to see a death of a primary bond dealer bank. And I don't think it's going to be a major Wall Street. It's going to be a minor bank. I don't know which one it's going to be, but there are several of them. And they're all at risk, and they're all complaining that they're at risk and they need help from the Fed. In other words, we need the money from the Fed and the Department of Treasury authorizing it in order to buy the debt. And here's some of the technical terms. It's called unsterilized monetization, because when they introduce new dollars into the system to cover that debt that we cannot sell, we're not draining the banking system of an equal amount. That's called sterilized. When you do unsterilized monetization of debt, you're printing money, you're not draining anything, you're increasing the money supply, and you're opening the door wide open for price inflation. And we're not only seeing price inflation from supply interruptions, supply problems, we're seeing it from sabotage, like diesel plants, diesel refineries, and we're seeing it from organized, what I call complicity between banks and insurance companies to raise insurance price, the prices, the cost of premiums for home fire insurance. Okay, this looks organized. This looks complicitous. It looks like they're working together. If you're a mortgage holder and you cannot get fire insurance, you lose your home, you lose your equity unless you can sell the home quickly. But you can't do that either because the banks don't want mortgages. We got a conspiracy with the banks and the mortgages and the insurance companies. This is very dangerous. It's very scary. But we've got the threat of monetized debt and its resultant. Okay, this is not like you wait a year or two. No. You wait 1, 2, or 3 months and you start to see more price inflation. Now, remember, after the lockdown, we got a lot of price inflation in 2011. Okay? Yep. That was not from excess money in the system. There was some interruption of the supply chain. Okay, point number one, monetization of the debt will bring about more price inflation. And that means foreigners feel uneasy holding our debt. And there are a lot of factors involved in their minds. The second thing is, since the Maidan 2014 US-Israeli coup of Ukraine, they raised the US and Israeli flags in Kiev. That's who did it. Ever since then, we've been weaponizing the dollar in a grand style. We've been weaponizing it for ever since 9/11, but we took it to a new level after 2014. We weaponized against the Russians. We froze their assets. And now this weaponization has taken on a new wrinkle. Foreigners do not want to hold treasuries if we confiscate Russian assets. You know, we talk tough. We act like, you know, it's our right because we declare the Russians to be guilty of war crimes when we're not covering the war crimes in Ukraine and underground in Ukraine, where they have baby factories, adrenochrome factories, bioweapon labs, you name it. The center of European trafficking and laboratory work is Ukraine, and it's never in the news.
Absolutely.
If you're a nation that wants to stop your NATO support, you're likely to get the dollar weaponization used against you, and they're selling treasuries. They did not, I did. I believe that if we're going to confiscate Russian assets, we're going to see them confiscate assets, and we're going to see the whole world dump treasuries. Okay, the third point, this is more technical. Pardon my voice. I'll continue to talk right through my worn out voice. I don't care about my voice.
I'll pipe in anytime, but I'm just letting you go. You're on a roll. So if you need a break, you just give me a signal.
I have noticed in the last 2 months that every gold, I'm focusing mostly on gold. Gold, I said this, gold with a battering ram will knock down the fortress doors, gates, and silver will come flying in on horseback. So I'm watching the gold market. Ever since we broke above 2000, what was it, about November, December? We were playing with it and getting above it and then going below it. What I've noticed is every pullback is brief, doesn't last for more than a few days, and lately doesn't last more than a few hours.
Yeah,
And
absolutely.
a few have noticed that China and India are buying every sell-off. I believe China now has a strategy where they sense a greater hostility in a trade war with the United States. And China has decided we're going to convert all of our surplus. They've got a hefty surplus in trade. We don't. We got $1 trillion deficit. We also got $2 trillion federal deficit. We got twin $1 trillion deficits. This is absolute dynamite to blow up the bond market. The Chinese are converting their trade surplus to gold. And they're waiting. You idiots want to sell gold? You don't see what's coming? Fine, go ahead, you Western fools. Sell gold, knock it down. And the Chinese pick it up. The Indians pick it up. The Indians are picking up the silver market too. So you've got monetization of debt leading to inflation. You got weaponization of the dollars, which means that foreigners, even our friends, are selling the treasuries, US government debt. And you got China and India and others. Okay, there's rumor of a multi-billionaire in Dubai. They're just rumors. And they're calling him a big buyer with no concern on price. Okay, so it's a billionaire. It could be, I'm just going to throw this out. It could be the UAE royals building their sovereign fund.
Could be, yeah.
I don't want to get into the UAE because they got a history and they've done some pretty weird things, but the UAE is going to be the window where BRICS take their treasuries. And here's another angle. Maybe it's not so much a billionaire, but it's a group of billionaires in Dubai, UAE, United Arab Emirates. And what they're trying to do is to get a sufficient amount of gold so they have the inventory to supply gold to all the BRICS nations that are dumping treasuries. That's another very big possibility. And the point of this hidden hand in Dubai, that's what they're calling it, the hidden buyer. They don't care. If gold is up 30 or 40 bucks, they continue to buy. Okay. We're not seeing the typical dynamics of anything witnessed in the last 10 years. I think this is a gold breakout. It's going to last into